Welcome to HSBC Global Viewpoint, the podcast series that brings together business leaders and industry experts to explore the latest global insights, trends, and opportunities. Make sure you're subscribed to stay up to date with new episodes. Thanks for listening, and now on to today's show.
This podcast was recorded for publication on the 3rd of April 2025 by HSBC Global Research. All the disclosures and disclaimers associated with it must be viewed on the link attached to your media player. And don't forget to follow us. Just search for the Macro Brief wherever you get your podcasts.
Hello, I'm Peter Stegall, and welcome to the Macro Brief. There's only one story this week. On Wednesday, President Trump announced sweeping new US tariffs. Among the headlines are a 10% baseline tariff due to come into effect on the 5th of April, with further reciprocal tariffs on individual economies due shortly after. There's lots to unpack here. So to assess the possible implications, I'm joined by Shanella Rajanayagam, trade economist, Paul Mackel, global head of FX research, and Simon Wells, chief European economist. Thank you everyone for joining today. So Shanella, let's start with you. What just happened?
Well, Peter, as you said, President Trump used powers under the International Emergency Economic Powers Act to implement a universal baseline tariff of 10% on imports from all countries that will kick in on the 5th of April. And then from the 9th of April, this particular rate will increase for around 60 economies, including the European Union, which means that countries like China will now face a tariff rate of around 34%, the EU will face a 20% tariff, and countries like Vietnam and Cambodia a tariff of more than 45%. So really quite sweeping. There was also some announcements around the de minimis treatment, which is essentially the treatment for low-value shipments, and of course the autos tariffs, which were mentioned last week. They have now taken effect, initially for vehicles and later on for parts.
So how much of this was expected and how much of it came as a surprise?
So in terms of the reciprocal tariffs, I'd say what was the main surprise was the sheer number of different rates on different economies. So it wasn't tariff buckets as some were expecting. It wasn't, investigations into the trading practices of some of these economies, but really quite high tariffs. Clearly, it's to provide some room for negotiation, but the question really remains, to what extent can some of these economies really actually negotiate down these very high duties?
And so you say there's a range of different tariffs being levied on different places. Are there any relative winners? Has anyone been surprisingly spared or facing lower tariffs than we might have expected?
So some economies have managed to escape the individual higher reciprocal tariffs, and they will only face the universal baseline tariff of 10%. Notable among these is the UK, especially given that the European Union is now facing a much higher tariff rate. Also, economies within the Middle East region will only face the 10% rate, and notably, of course, Brazil too. To add to all of this, Canada and Mexico have been exempted from the new round of tariffs, and so none of these, the baseline tariff or the higher reciprocal rates, will apply to imports from these markets.
And in terms of sectors, there are some carve-outs there too, I think.
That's right. So some sectors have been exempted from these additional duties, notably any sector that's currently facing Section 232 tariffs. So, for example, steel, aluminium, autos. There's also exemptions for sectors such as semiconductors, pharmaceuticals, copper, wood, and also some critical minerals and energy imports as well.
So how have the US's trading partners reacted to these announcements?
So far, the reaction has been that some will be looking to levy countermeasures. For example, Canada has come out and said that, as well as China. Other partners, it seems as though they're waiting to see how exactly negotiations pan out, like the UK, for instance. But off note will be exactly what the European Union does, given that this is the first time it's really been hit by a big sweep of tariffs from the US. And actually, maybe that's one for Simon. How do you think the EU might respond to these sweeping tariffs?
Yeah, well, I don't think they're going to do anything in a hurry. There's a meeting of trade ministers scheduled for Monday, the 7th of April. We're certainly not going to hear anything specific ahead of that. But the EU has a range of tools that it perhaps didn't quite have in the first Trump presidency, which it can use. But really, it's a very trade-intensive economy. It doesn't want to escalate. On the other hand, it has said it doesn't want to retaliate, but if necessary, it will have a strong plan. The key question for Europe, though, I think, is can it remain unified, given that each country leader is going to be under enormous pressure from domestic industry not to harm it and retaliate strongly. That maybe limits the amount of tough talk that the European Commission can follow through on. And also, of course, there's wider geopolitical issues that it has to consider in any retaliation. So I think, yes, there will be some countermeasures, but they will be targeted and considered, and it may be a while before we hear what they are.
So, Simon, you've just come back from Hong Kong, where you said there was a lot of investor interest about Europe on the back of its planned fiscal stimulus. Do you think the impact of these new tariffs will outweigh the potential benefits of that stimulus?
Well, I think they sort of operate on two different time horizons, really. The impact of the tariffs could be quite immediate. And particularly, of course, if there's no negotiation at all and we get the full 20% on the EU in a lasting and full implementation way, then yes, that adds considerable downside risks to the economic outlook in the near term. But in the reports we've written on the subject in terms of the defence spending, in terms of the infrastructure spending, this is going to take a while to ramp up. The numbers are big, but actually getting the money to hit the ground, particularly on defence without sucking in a lot of imports, is a challenge. So I think really, yes, this increases downside risks in the very near term and perhaps the medium term as well. But the upside from some of the potential fiscal stimulus is still there on a longer horizon.
So, Simon, Shanella mentioned earlier that the UK is facing a 10% tariff, half of the 20% tariff that the EU is facing. Is this good news for the UK?
Well, of course, it depends which way you look at it. And the previous existing average tariff on the UK from the US was pretty low and a lot lower than 10%. So this is a significant step up that will have an impact on the UK's exports to the US, and goods exports to the US are about 15% of the total. So it's big. On the other hand, yes, if the UK was still in the EU, it'd probably be facing 20% tariffs. So in that sense, there are people who are saying this is, of course, a benefit of Brexit.
And does this new news on US tariffs affect your views about what the European Central Bank or Bank of England might do next?
Well, as I say, we have to just wait a little bit to see how the negotiations proceed and see what is ultimately enacted. It does increase the downside risk to growth and therefore a little bit of more disinflationary pressure potential. Crucially, though, the degree of retaliation will matter a lot for the inflation implication, and whether or not the central banks just look through that one-off is key. So in answer to your question, still think the ECB are going to cut in April. If they are going to pause, June is the more obvious time where they have a forecast to assess all of this news. As for the Bank of England, I think they're going to cut in May, but they'll still be pretty cautious, potentially given some of the upsides for inflation from retaliation. But certainly it chimes with our view that the Bank of England is going to cut more than the market has been expecting.
Thank you very much, Simon. So Simon's saying there that the macroeconomic outlook, you often have to wait a little while before the full results are evident. There's no luxury of time when it comes to reactions in the currency market, though. So, Paul, perhaps we could turn to you. How have currency markets reacted to the US tariff news?
It's been incredibly volatile since the announcements. And we can see that in terms of how the dollar really weakened very sharply versus a number of major currencies, primarily the euro and also the Japanese yen. But when there's been different stages, more or less, to how this story has evolved. At first, there was a sense of risk aversion and the dollar was trying to rally. But then clearly the FX market started to become more concerned about the U.S. growth outlook. In other words, how much it could potentially slow. And that's been, as I said, weighing on the dollar since that brief moment of risk aversion being expressed in exchange rates.
So usually the US dollar would tend to strengthen in uncertain times, but you say that doesn't seem to be happening today. Do you think its safe haven allure will increase in the coming days?
It's a popular topic of discussion lately. So when we've had these pockets of risk aversion over the last couple of months, the dollar is not strengthening with that. I think there are some reasons why. First of all, is that the positioning in the FX market was a problem. I mean, for a good number of months there, the market was overly long the dollar. So when you had these scary moments in markets, it was very hard for the dollar to be rallying into that type of environment. The second thing probably comes down to gold. Is it providing somewhat of an alternative as a safe haven in these uncertain times? And that's stealing the thunder of the US dollar. But ultimately, we don't think a leopard has changed its spots. If markets were to get increasingly concerned about a US slowdown or a recession type story that feeds into more concerns about the global economy, ultimately we think that the dollar would begin to stabilize, if not strengthen.
And so what's your call for the rest of the year? Do you think the dollar will gain more strength?
But in the very short term, I think it's going to be difficult for the dollar to stabilize. There's a lot of uncertainty about what's happening with regards to the U.S. economic outlook, how the hard data evolves. And clearly the market is quite concerned about how the dollar has been trading. Ultimately, we think some stability can come back for the dollar. But it's going to be a longer-term story, whether the Trump administration can come out with policies in terms of deregulation potentially, or even the tax cut story that can improve sentiment. If that happens, perhaps that can bring back some shine to the dollar again, but it's going to be a very bumpy few months.
Paul, thank you very much. And one final question for each of you. There's obviously plenty of uncertainty about how the situation might develop and what the impact of these latest policy moves could be. What's one key thing, one data point or decision that you'll be watching out for in the coming days? Perhaps, Shanella, we could start with you.
So I'll be watching out for how the negotiations actually evolve, and particularly what tariffs actually get implemented on the 5th of April and, more importantly, on the 9th of April.
Thank you. Simon?
I think I'm going to be watching exactly the same thing. I mean, that's absolutely key to the outlook, both for Europe and global. I would also add, though, and Paul's hinted at this, that, of course, the US is going to be particularly data dependent, and the labour market is going to be key for the Federal Reserve. So I guess the US labour market indicators also, but really it's all about how those negotiations evolve.
Thank you. And Paul, a final word from you. What are you watching?
While I would echo those comments and thinking being very important, I'll be looking at how some currencies, the defense lines, whether they hold up. So for instance, with Asian currencies, will some central banks be a little bit more tolerant of currency weakness to help offset these tariffs? If that's the case, we could be moving into a new dimension of volatility in the currency market.
Shanella, Simon, Paul, thank you very much.
Thank you.
Thank you.
Thank you.
That was Shanella Rajanayagam, Paul Mackel and Simon Wells on the impact of sweeping new US tariffs. If you want more information on the implications for Asia, then please listen to a special edition of our sister podcast, Under the Banyan Tree, hosted by Fred Newman, our Chief Asia Economist, and Harold van der Linde, Head of Asia Equity Strategy. HSBC clients can keep up to date on our latest research on tariffs by downloading our app. It's available on Apple's App Store and Google Play. And if you have any questions or comments about anything we've talked about today, please contact us at askresearch@hsbc.com. That's all from us today. Don't forget to like and subscribe to the podcast, and please share it with friends and colleagues. We'll be back again next week, so until then, thanks for listening.
Thank you for joining us at HSBC Global Viewpoint. We hope you enjoyed the discussion. Make sure you're subscribed to stay up to date with new episodes.